Thank you. Good afternoon, and thanks for joining us here today. In the next session, I'm going to be covering two topics. I'm going to be sharing with you what has been our performance in 2024 and what is our direction of travel into 2025 and into the future. But let's start with performance first. In 2024, we had a robust performance in a challenging business environment. We delivered EBIT in the area of 1.2 billion euros, which is some 200 million above the year before, or a growth of 21% year on year. We had a robust cash generation with operating cash flow in the area of 1.35 billion euros. Now, this, as said, has been achieved in a challenging business environment. As illustrated by the chairman of the board earlier on, 2024 started strong with a strong demand supporting good prices in Q4, but eventually this dynamic weakened up during the year. In order to deliver this performance, many different actions have been implemented. And here, I'm just recalling the main one. The main event, or one of the most important events last year, has been the successful ramp-up of Paso de los Toros. I'm going to be coming back later on this and give you some more elements about that. But equally, in another part of our business, of our portfolio, we have delivered improved performance into the advanced material space, despite, as said, weak economic or weak underlying demand. We have also done a lot of work to improve our competitiveness in a number of different areas across all our different businesses, in the areas of sourcing, operational efficiency, commercial execution, organization. That has led to the results I've illustrated earlier, and has also contributed to reduce our fixed cost base in excess of 100,000 million compared to the year before. So, a solid performance, and we finished 2024 in a solid financial position. Our debt level ended up being well below the policy limit of 2 as a ratio between net debt and EBITDA. And this is despite, in 2024, we still had significant capital deployed, about 550 million. Significant proportion of that went to, let's say, complete this big investment cycle that initiated a few years ago and went into the completion of the construction of the biochemical mill in Leuna. So, strong position, I would say, despite or on top of significant investments. Now, if we project ourselves into 2025, we estimate our CapEx need to be reducing, of course, netted of potential acquisitions, to be reducing and progressively trending toward what are the historical levels of CapEx utilized by our business, which are very, very low relative to the scale of the business and very, very efficient. So, if we think and combine this element of robust performance, despite challenging market conditions, robust cash generation, disciplined capital management, when we look forward, this is what we imagine, and this is what we have communicated last year. We see in this period, 2024 to 2028, to give it a frame, we see the cash generated from our operations going in part to support our future investments so that we can support future performance delivery. We see a significant proportion of it being returned to our shareholders under the form of dividend or other forms. And actually, we see the part returned to shareholders being more than half the earnings generated. This is a different compared to the previous investment cycle where the majority of the cash generated was invested into these new big and transformative projects. And we trust our performance will be such to continue to invest in the solidity of our balance sheet, because that will represent, let's say, a safe base, whatever happens in the external economy, and a safe base to, let's say, tackle opportunities that the future can offer. Talking about distribution, we are proposing to this assembly today the payment of a dividend of 1.5 euros per share, which is in line to what has been paid in the last 2 years. That corresponds to a total amount, let's say, allocated to dividends of 800 million euros on the 2024 base, or a dividend yield of some 5.6%. But this year, there's also another element. For the first time in the UPM history, there is a program for share buybacks, which has been activated and which is currently ongoing, which is, as it was indicated earlier on, the first time we are utilizing a tool in our toolbox to reward and distribute excess or available cash at the end of an important investment cycle. The amount of this share buyback program is, depending on the metrics you take, up to 160 million euros, or 6 million of shares, equating to more or less 1.1% of the shares of UPM currently available. But all of this is about financials. It's about what we have achieved. An important dimension is how we have achieved it. And when it comes to sustainability in the broadest sense, so it's about environmental aspects, it's about social responsibility, it is about the solidity of the governance and your processes. We are submitting ourselves to regularly, let's say, scrutiny from a number of independent external bodies. And what we got out of these audits is that they typically position us at the top of their ranking. There are several examples here. I just pick one. I just pick EcoVadis, a sustainability certification that puts UPM into the, let's say, platinum seal level, where only less than 1% of the 150,000 companies they typically scrutinize every year fit. So this has been part of our traditional core values and will continue to be in the future. But now, talking about the future, let's start from confronting ourselves with the environment we are in today. The future always comes with its own load of uncertainties. But we have entered 2025 with, I would say, extremely volatile, uncertain and complex and unpredictable situation. Over the last 2 decades, the world has experienced a globalization. And that has meant that over 2 decades, goods were flowing freely. People, ideas were flowing freely. And globalization came with its own challenges. I'm not pretending it was all good. But from an economic standpoint, that has ensured the world a couple of decades of sustained growth. The world we are into now is very different. We're here talking about barriers. We hear words like trade wars. We see a certain number of military conflicts. We see a lot of uncertainty. Today is the 27th of March. Next week, the 2nd of April, the American administration will unveil what they what they think, what they will do in terms of tariffs, which is most likely having a significant impact on the direction of global flows, and are going to be shaping a scenario that will be probably pretty different from the one that has been built in the last 2 decades or even longer. So you can say this is a challenging environment, but times of challenges are also times of opportunities. And when you look at the opportunities, we have flagged here sustainability. Because it may be true that it's not making the headlines on the newspaper, on television right now, and may not be top of mind in the priority in a number of agendas. But it is equally true that all the problems, from pollution in the ocean, climate change, and so on, that have characterized our society and determined the emergency of a demand of more sustainable ways of operating, they are still there and will be there in the future. So we believe that sustainability is a moral imperative, but we also believe it is a good business. And we are well set to take the opportunities that is and will be generating. And there are other elements here, like consumer demand or consumer confidence, that two are connected. And there are economic cycles, and consumer confidence may be going up and down. But when we look at mega trends like demographics, middle class growing buying power in geographical areas and so on, we know that the majority of the businesses where we are in are insisting on markets where there is growth. And that's what we want to target going forward. So we said challenging environment, and how do we think to thrive and succeed in this environment? Now, it all starts from what we are today. If we go back some 15 or 20 years ago and the question was, what is UPM? The answer there would have been probably quite simple and straightforward. Vast majority of the revenues and the profit were coming from paper. So it was easy to say UPM was a paper company. Today, paper is a relevant part, is still a relevant part of our portfolio, some 20 to 25% of our revenues. So that's why it's there. That's why it's important. But during this time, through extremely successful transformation, the company has developed large and strong, highly competitive positions in a number of other businesses. If we talk about pulp and renewable fibers, today we are the third biggest pulp producer, market pulp producer globally. We were not that 5, 10, or 15 years ago. If we talk about advanced materials, there are materials like the Raflatac labeling solutions, the specialty papers, the plywood laminates. This is a category of products which are not commodities. These are value-adding products or value-added products that insist on markets which have fundamental organic growth opportunities. And we have built leadership positions there. Number 1 with specialty paper, number 2 with Raflatac, number 1 in Europe with plywood. And this business per se, this segment, is about 1/3 of our revenues today. That's an important one. That's why it's there. And we have plans and ambitions to grow further in this space. And then it comes what we call decarbonization solutions. The world, the companies, the society have made commitments to reduce their dependence from fossils. And that's true, yeah, there are political debates, there can be, let's say, some temporary changes of priorities. Some actions, that's not what we see, that's not what we envisage. Some actions may even be deferred. But the fundamental trend is there, and the need is there. And we have positioned ourselves over time to answer to the need of CO2-free solutions through producing CO2-free energy, to producing biofuels, through producing biochemicals. I'll tell you some more about that soon. But all of these insist on one thing that characterizes also what we are and where we're coming from. All of this depends on sustainable, renewable feedstock. Directly or indirectly, our businesses depend from wood. Whether it's a wood from the Finnish forest, from the American forest, from the plantations in Latin America, we see these as a strength and a competitive advantage for our company. There are a lot of talks these days about rare minerals, and you also know what kind of geopolitical tensions this creates. But in a world that moves away from fossils as a source to create products and needs something else, sustainable, renewable feedstock are going to be the rare mineral of the future. And we believe that our presence, our ability to understand and to master this value chain is the base of the competitiveness of what we have and the base of our competitiveness in the future. But so now what is it, UPM? It's interesting because today, every day, hundreds of millions of people around the world are utilizing UPM products or products made out of UPM materials, whether it is the newspaper they read or the magazine, the books of their kids, if it is the labels on the products on their refrigerator, is the electricity they use at home, if it's in Finland, or the biofuels into the diesel they put in their car. Tomorrow, the biochemicals in a variety of products they use. There's a lot of UPM products that enter the houses of millions of consumers every day. So this is why we contribute to the everyday of people and renewing it toward more sustainable solutions. But now, how do we see ourselves evolving? In two directions, which are represented here. Today, UPM is a global company. We have about half of our revenues which are generated outside Europe. And this trend is growing. And we see it continue to grow. But to be clear, we see Europe growing. And we will work to grow our presence in Europe. But we are going to be working to increase or accelerate our growth in other parts of the world, capturing the opportunities that a number of developing economies offer, but also creating a portfolio that, not being dependent on one single geography, will not be exposed to this geopolitical volatility. This is the other dimension. We see growth, and we will pursue growth at different stages, in different steps, but we will pursue growth in fibers, in advanced materials, in decarbonization solutions. And we will accept and cope and manage the decline of the demand in the communication paper business. I'll give you now, let's see if this goes ahead. Yes, some more color now about each of these things. But how we plan to do that is doing a lot of things. That's the way it works, but having three clear priorities. First, improve our competitiveness. In a market environment that's getting, as said, more challenging, more volatile, more fluid, it does not mean that the winners of yesterday will be the winner of tomorrow. The winner of tomorrow are the companies which are able to anticipate change or adapt to change. And we want to be the winner of tomorrow. So this is why we are putting a lot of focus and effort in improving our competitiveness so that we can grasp the opportunities of the future and cope with these challenges. But then we will pursue growth. We said it at the beginning, we want to pay our investors and our shareholders good, returns, which means, as much as possible, a predictable, progressively increasing flow of dividend. But to be able to do that, we need to have a profitable growth that will deliver predictable, progressively increasing earnings. So this is why growth is important. And then world-class businesses, because we create value when we demonstrate to be the best owner of a business. And we have several businesses. And we are the best owner where every, let's say, business area is performing as the best, or at least at par with the best in every segment where we are competing. Because in a more complex, challenging business environment, there will be less and less space for number 3, number 4, and number 5. So that is where we need to be, and this is why we have plans to be there, to get us there, or to remain there, depending on where we stand today with the different businesses. But now, as I said, let me give you some more element about each of these 4 different business segments. Let's start with fibers. Fibers is a story which is the sum of 2 different stories. One is based on the platform in Uruguay, the other one is based on the platform in Finland. I start with this one. Our Finnish platform has always been an excellent platform, generating good returns, operating very efficiently, being very competitive. And it is still today. The point is that 3 years ago, the, let's say, environmental situation changed significantly. Since the beginning of the war in Ukraine, the Russian wood was banned, and that created 2 problems in Finland, not just in Finland, but in Finland. It created 2 problems. One is wood prices started to go up. This is a problem for an industrial player, because prices grew almost doubled in 3 years. But there is a second problem, which is wood scarcity, because while wood availability was decreasing, demand was increasing because of some new investment that came on stream. And today, there's not just enough wood to run at capacity all the assets that are in Finland. This is the challenge. This is why, the chairman of the board has illustrated it before, and we've said it a number of times. We regard the current situation as not being sustainable in the long run. To become sustainable, either demand decreases, because there will be capacity exits, and there have been some, or supply will increase. There may be an end of the war in Ukraine scenario, which can bring some relief on that. But most likely, for a proper rebalancing and for the whole wood industry, I'm not talking about UPM, whole wood industry, wood-related industry in Finland, to restore adequate and sustainable levels of profitability, there need to be a rebalancing. In this environment, we are not immune from the challenges, but we have changed the way of operating last year. And we have managed to stay profitable in a very challenging environment, and also in the second part of last year, where the combination of high wood cost and low pulp prices put the industry under big stress. And we have achieved that position by changing the way we operate. Before, we were running our businesses in the value chain, how can I say, as independent, and we were maximizing, let's say, performance in forest, in timber, in pulp. Now we have streamlined the way we run this platform, and we aim to optimize the profitability of the whole platform. We have changed our way of working. Typically, a pulp mill is run 24 hours a day, 7 days a week, at full capacity. Coming September last year, we took the decision to stop production 3 weeks in 2 mills, because that combination of high wood cost and low pulp prices would have meant losing money. So we have acted and reacted to this situation. We have, let's say, 3 pretty large mills, well-maintained, very efficient. We're coping with the situation, but as I said, probably said it a couple of times now, we're not immune from the challenges of the market either. Now, if we go to Uruguay, it's a very different situation. Over there, with the ramp-up of Paso de los Toros, we have now 3.4 million tons of capacity, active capacity over there. And there is more potential that we can extract from that platform. Today, the operating costs are already very competitive, but now optimizing the processes further, we know we can improve still the cost base. Let's say, and we keep on aiming, or we are working to achieve our aim or our ambition of $280 per ton of cash cost for the Uruguayan platform. That puts us among the, let's say, the best in class in that space. But also we have potential coming from expanding production and capacity beyond where we are. Today we have 3.4 million tons. We believe that over time, through continuous improvement and some debottlenecking, we can push that limit to 4 million tons. This will be a gradual process. It will take time. It may take up to 4 or 5 years to happen. But we know can happen because we have done it already. If we look at Fray Bentos, the other mill we have in Uruguay, it was designed for 1.1 million tons, and today is producing 1.3. So this is what's going on in Uruguay, but in fact there is much more. And last time we spoke in this forum about it, we were still ramping the mill up. But now in a video, I would like to give you a glimpse about how the situation looks like over there right now. Impressive. But now let's turn the page, okay? We turn the page to the other product category I briefly talked to you about, advanced material. I said it is including different products, different materials, value-added solutions. And I want to start with specialty paper. Specialty paper has a number of different specialty paper, but the core, the bulk of the specialty paper today is materials that are utilized then into the labeling industry, either as face materials or as backliners. In there, we have built over time #1 position in the world. We are the biggest there. And we want to grow. We can continue to grow there because the demand for labels will grow. But there's also another part of our portfolio which is today is small. Well, it's small in UPM terms, okay? It's sizable already in absolute terms. Today is small, but there's a lot of growth potential, which is the area of paper materials that through coatings and treatments can be utilized to replace plastic or multi-laminate product in packaging. And this is because there is a strong demand, really strong demand, coming either from consumers or from brand owners of products that can replace plastic or multi-layered materials because they are not seen as environmentally friendly, they are not easy to recycle. And there's a lot of development in that area, and we do regard this, together with others, but we do regard this as an area of strong growth into the future. But here too, I try to put in visual terms what we do and where our products go. You can probably start to see a connection here between pulp and some uses of pulp, and specialty paper is a use of pulp. But now if we go down one step in the value chain, there's Raflatac. Raflatac leverages, let's say, the mastering of adhesive technology to transform materials into laminates that then go onto products. And Raflatac has built over time a position. Today is the most global business that we have in our portfolio, and is the second biggest in the industry globally. And there, you know, our ambitions don't end up there. With Raflatac, we're working on a dual-track strategy. In one sense, in one direction or one dimension, there's work ongoing to improve the competitiveness. So to accelerate growth, but also to improve the financial performance. On the other track, there is to add to the organic growth, potential growth through acquisitions. And you may have seen that in the past months, we have done 2 acquisitions in the so-called graphic advertising space that added up to a 3rd acquisition done some time ago, where we are building an important position in this graphic advertising space, which is an adjacent business to the current labeling business, where we can leverage the adhesive technologies of Raflatac. We can leverage the knowledges and the capability, the global scale. This graphic business is highly service, intense business. We can leverage the commercial scale, global scale of Raflatac, or the network of terminals that we have globally. So we can not just grow by acquiring entities, we can generate significant value through synergies. So this is the strategy and the ambition we have with Raflatac. And here too, a short video should illustrate some of these products that we have in our, let's say, historical portfolio. We have added to our portfolio recently through these acquisitions. And then comes plywood. Plywood, we are today the biggest in Europe. This is a business that has demonstrated an incredible level of resilience as it has gone through, let's say, challenging economic cycle, construction being an important segment for this business and demand in construction being pretty weak in the past years, and also has absorbed the exit from Russia and from a mill that we had in Russia over there, but has continued to deliver constant, excellent performance. And now is set to capture the benefit of the constructions it has made in the past, because the construction business being challenging, the business has developed positions in other areas, vehicle floorings, LNG vessels, insulation, or become market leader over there in those spaces. And now the construction business seems eventually to start to recover. And again, this is all hypothesis at this point in time, but a potential reconstruction of Ukraine will represent directly or indirectly another big opportunity for this business. So, you know, in the interest of time, there's not the possibility to go into too many details here, but hopefully I conveyed a vision or an impression around the potential that we have here and the scale that we have already, because as said today, it's a third of our revenues. But then let's go into this part. This part is more new to UPM. This part includes businesses like energy, where we have, in recent time, through investment in Olkiluoto-3, increased significantly our presence. Today, we are the second electricity producer in Finland. Almost 100% of the electricity we produce is CO2-free. And with that, we have contributed to the investment in Olkiluoto-3 and the activation of Olkiluoto-3, we have contributed to the self-sufficiency from an energy generation standpoint of Finland, which in the current geopolitical situation is a very important thing. Now, electricity and electricity prices, you know, in Finland are very volatile. So if you want, from an industrial standpoint, industrial player standpoint, this is a challenge. Electricity prices are in average, let's say, compared to the European average, pretty low, which is positive in the sense that it delivers competitiveness to the local industry. But also the other positive element is that 95% of the electricity that's produced in Finland is CO2-free. So this makes Finland a very attractive place for companies operating, for example, in heavy CO2 industries. It can be steel, producing green steel. Finland becomes an attractive place where to invest because of this combination of CO2-free energy and competitive energy prices. But also industries like data centers, which are very energy intense, are looking into Finland as a place where potentially invest. And there are other sub-segments. It can be hydrogen production tomorrow. So today we are in a business that's very attractive for UPM, but tomorrow all analysis, tend to agree on the fact that demand will increase and will make this market even more attractive going forward. But now we go to biofuels and biochemicals. You can easily see or think that for a company that is originating in the forest or on paper, biofuels or biochemicals are pretty far away. But the reality all comes from wood. And when it comes to biofuels, the market has changed significantly in the last 2 years. That's a market which has been undersupplied until 2 years ago, with high prices, very high margins for all the operators there. And then it changed very quickly. It ended up being very quickly oversupplied with low prices, with, stress on profitability. Why this has changed is because of many different reasons. There's not just one. But one of them is that regulations have helped to create this market, imposing mandates, imposing CO2 reductions, and so on. It's been positive. But changes in regulations have made this market then very complex, because changes in regulation have reduced mandates suddenly, or have introduced things like complex elements like double counting certain CO2 reduction, utilizing certificates, which means you can either reduce your CO2 or you don't reduce them, but you buy some certificates where somebody else somewhere in the world tells they have reduced their CO2. All these elements, sometimes, let's say, not well controlled, sometimes, linked to dumping phenomenon and so on, have ended up creating in Europe, or pulling into Europe, a quantity of productions from other parts of the world, or even certificates, which have determined the situation that I have described. So in this situation, the first priority for us is to restore the profitability. And we have very solid, very credible plans about that. So we trust that will happen. But then when we look a bit farther ahead into the future, let's say there are different analyses that indicate slightly different timelines, but in general that by the end of this decade, the biofuel market will be undersupplied again. So this means that we continue to look at this market with attention and with interest. But at the same time, we also need to recognize the changes that have happened in this market, and we need to recognize that if we want to build a bigger position in that market, we need to ensure that it's based on investments which are capital efficient, and then on products which are at the bottom end of the cost curve, so that investment will be productive in every market situation, in every circumstance, not depending by regulations on import from Asia or other things. This is what we are working upon, to develop in this concept. We took time this year and next year, and by next year we will be in a position to share more about our prospects for this market. But now it comes to biochemicals. And biochemicals, there, it means Leuna today, and we are at a very exciting moment of our history, probably something that over time will be looked backward and will be considered a milestone. Because we are very close. In the second part of this year, we will have the integrated commercial startup of Leuna. And one can argue, why did it take so long? Because it's a project that started in 2020, February 2020, and it's now 2025. But let's remember a couple of things. February 2020, March 2020, the world went into a global pandemic that stopped our operation and construction or interfered with it for many months. And then when that situation normalized, Europe had to cope with the consequences of the war in Ukraine. Lack of materials, cost going over the roof, lack of personnel. Several people working in the construction of that mill were from Ukraine and had to go back and fight. We managed all of that. We coped all of that. But even if we park that, okay, which are hopefully exceptional circumstances, I want to give you a few numbers. These numbers are 30 different technologies that are utilized in Leuna. Several of these technologies are completely new to the world. They have never been utilized before. Surely they have not been utilized on such a scale. We have 700 patents filed around and about what we are doing over there. We had so far 7.8 million hours worked there. And that has been to create a number of things, including 160 kilometers of pipes, 1,800 kilometers of cables, 31,000 valves. So all the numbers there are mind-blowing. So if this looks complex, it is because it's complex. And this complexity is what has kept a number of other companies, or everybody so far, away from trying something like that. But these complexities, the learning we have acquired during this process, these patterns and so on, they are representing today a competitive advantage that we will have on anybody else that will want to do the same in the future. And we have another one, because the products that we will produce over there are products that are today produced by a lot of excellent chemical industries. And those chemical industries have a lot of know-how in that area, but they don't know of wood or the wood supply. That's what we know. This is the other competitive advantage, the other unique factor that we have there, and which makes that today we are looking at this project with a lot of positiveness. But what happens in Leuna amongst all this complexity? Very briefly. Leuna is to be seen like a body with 3 hearts. It all starts with wood. And then there is the first heart that turns the wood into sugars on one side and into lignin on the other side. And then second heart turns the lignin in glycol, and the other one turns the sugars in glycol, and the other one turns lignin in functional fillers. And when we say that the second part of this year, the mill will go into integrated commercial execution, it means that the 3 hearts will all be pumping at the same time, which is part of the complexity in this project. But I've been talking about the products that come from this process, glycol or functional fillers. What are they used for? They are in reality utilized for a huge variety of applications. Altogether combined, there are some today approximately 60 million tons of consumption in total with equivalent fossil-based products. At regime, we will produce 220,000 tons. So it's a big quantity, but it's a small amount. And that gives us the possibility to target specific areas in the market where there is a high demand of sustainable products that cannot be met today but fossil-based equivalents. And our positiveness about the future comes from the fact that the level of interest is such that the opportunity pipeline for these products is several times already what we will be able to produce. And if we talk about the functional fillers here, the level of interest, just to give you some color, is such that 17 out of 20 of the biggest tire makers globally are currently testing the product. So, we're positive, we are very ambitious about the future, but at the same time, we need to stay grounded in the reality. The next couple of years will be about successful operational ramp-up and commercial ramp-up, and then we will think about how to develop later on the base of all this competitive advantage that we have built. But let's have a look about how Leuna looks like right now.
UPM Biochemicals is one major cornerstone of UPM's transformation towards a material solutions company. Ramping up our first-of-its-kind biochemicals biorefinery in Leuna, Germany. Startup of Leuna Biorefinery initiated in late 2024. Integrated commercial production expected to begin in the second half of 2025. And full production expected in 2027. Unique combination of over 30 technologies and process steps. 700 patents registered for Leuna plant, products, and applications. More than 200 employees from 16 different countries. Offering renewable wood-based biochemicals with a superior CO2 performance. Verified chain of custody. Global brands are already on their way towards net zero. What's missing is the large-scale supply of decarbonization solutions. Until now,
the renewable chemicals and bio-based materials produced in Leuna will transform brands in textiles, in packaging, automotive. Many customers have recognized the significant potential already today, which is reflected in a strong commercial interest in our products.
And finally, from a business of the future, the present and the future, to a business of the past, the present and the future. Communication paper. The demand of graphic paper has been declining for 2 decades now. And all along, and the reality is that it's probable that it will continue to decline in the years ahead because the underlying trend like digitalization, demographic profiles and so on are pushing things in that direction. But as a business, we have delivered the ability to deliver performance all across these past years. And communication paper with this result and this case generation is actually what has fed the transformation of the company. We see it continuing, going ahead through disciplined, let's say, through leveraging our network of 10 mills in 4 countries, disciplined asset management, disciplined commercial execution. So, and to recap, this is the last slide. With a solid performance in 2024 in a challenging environment. 2025 comes with its own certainty and a fair load of uncertainty, but our focus is on competitiveness, growth, and ensuring that we run world-class businesses. We aim for growth, and through the growth, we aim to continue to deliver our shareholders and investors interesting, attractive returns over time. This concludes my presentation. Thank you for your attention.